You're not watching a screen right now, are you? So
No, I'm not, no.
So when you think of a day trader, you think of someone that's constantly looking at the screen.
Yeah. Well, number one is today's Friday.
Okay.
Was I supposed to say that?
No, that's right.
But one of my major actually, people can write this down if they're listening. One of my golden rules is there's no point really trading the markets after about 2 o'clock GMT on a Friday.
Okay.
Because by that time, it's a Friday. Most traders, what are they doing on a Friday? They're probably wrapped up at lunchtime, going home.
Going to their beach houses.
Yeah, exactly. They're probably taking a day off early. By about 2 p.m. or even about lunchtime, by about lunchtime on a Friday, the volatility and the volume of trading just kind of drops.
Okay.
And if you stick on trading, you might get into a lot of fake moves, what we call them whipsaws, when the market says, oh yeah, I'm going to go higher. And then what does it do? Oh, no, I'm not. And then it changes its mind. So you get a lot of false signals about it. So I just kind of avoid trading around about that time.
Can you explain the concept of liquidity as briefly as you can to our listeners? Because I know it's something that you probably just talk about like everything, but you've just described liquidity there.
Yeah.
Earlier you said 2 hours after the open in New York, liquidity kind of drops out a little bit.
Yeah, exactly. By liquidity, we just say money flow, and how much money is flowing into a market between buyers and sellers. There are some markets that are not liquid or that they don't have much money flowing in them. So, for example, I never trade stocks that haven't. For example, one of my golden rules is I never trade stocks that have less than 100,000 contracts in volume. Okay, I don't want to get too technical on that, but
okay.
So you do want to trade markets that have a lot of money flowing into them. Okay, liquid markets. Otherwise, what's going to happen is you're going to get really bad execution. You're going to get slippage.
Right.
One of the major problems with trading stocks, unfortunately. One of the best markets to trade, even better than stocks, is the currency markets. The currency like euro, the British pound, the euro dollar. These are very liquid markets. Same with the S&Ps. Most people who go into trading, they're thinking about stocks. Individual stocks, yeah, like Apple. Apple is pretty good. Apple is a very liquid stock. I like Apple, but other stocks which are not very liquid at all, you don't want to trade them at all.
In Chicago, there was a frozen shrimp future that would trade between 2:30 and 3 p.m. in this little pit. And I remember going to the pit, and it was like literally a guy looking at the paper and chewing gum, and they would get ready at 2:30. They would execute the contracts, and then they would go home. And that's not the kind of thing you want to speculate in, is it?
Yeah. The last thing I'll mention here, just before I go, is that there's a big myth among traders that they think when economy is going to crisis mode, the money goes into gold. That they think in a recession, gold will suddenly pop.
Yeah, I've heard that
and go
before,
higher.
actually. Yeah.
And this happened during the economic little market crash we had in September of last year. A lot of people saying, "Hey, Alessio, why don't you go on TV and say go and buy gold?" Instead of what I said actually was go into treasury bonds and the U.S. dollar. The reason is that people have been probably falsely informed that when markets go into crises or when there's a recession, that money goes out of stocks and goes into gold. Not true. Money goes into safety, yes, but it goes into liquid safety. Gold and silver are not liquid. They're not liquid for hedge funds, I should say this. Okay. They're liquid for us. Yeah, we can exchange money and go into gold. But if you think about $1 billion hedge fund, they can't suddenly just exit out of the stock market and go into gold because gold is not very liquid. They want to get as much liquidity and the best price possible for that exchange to happen. So the money flows out of. So in a crisis, in a financial crisis, what usually happens is money comes out of risk, which is the stock market, and goes into liquid safety. By that I mean not gold and silver. It usually goes into the treasury bonds, T-bills, and of course it goes into the U.S. dollar because they're the most liquid safe havens in the world. So again, this is a big misconception. A lot of people have been taught, in a crisis you should buy gold. No, in fact, if you look at the last recession we had, the last 2008 recession, what happened to gold? Gold dropped in 2008 from $1,000 to $750. All right? Because why? Because people don't understand it. In a recession, there's probably a lot of big money out there selling gold to raise cash. All right? So gold, all assets get sold in a crisis mode. That includes gold and silver.
Right.
So in actual fact, what really actually tends to boost gold and silver is what tends to happen right now is quantitative easing. So again, any kind of remarks we hear about quantitative easing, printing tends to boost gold and silver because they're a hedge against the devaluation of the dollar. So,
okay. Last question here. Sure. What kind of returns do you shoot for on an annual basis, and are you rich?
Okay. Well, first of all, I'm aiming in terms of returns and monthly targets. I'm looking for 20% returns per month.
Per month.
Wow.
Yeah. Now, do I achieve 20% every single month? No. Sometimes I probably make something between like 10, 12%.
That's still phenomenal, right?
And sometimes, sometimes I may make more than 20%. I do very well, let's put it that way. So I've been doing it since 2005. I make a very decent income from it. I do very well. So I wouldn't be doing it if I wasn't making income from it. So it does take a long time to get to this kind of position. I'm not saying that it's easy money. For people out there who think that trading is an easy way to make money, it's not true. Again, that's a lot of BS told by the industry out there to try and probably take money from you. But the reality is, if you work hard at it, if you really are committed to succeed, and if you need to also have a power team behind you. You need to have some guys out there. The way I did it was, I sat down next to some good traders who taught me. I watched a guy. I sat down to one trader, and he showed me in front of me how he turned live. By the way, not something he did before. He showed me right in front of me. Within 3 months, he turned $14,000 into $137,000. So I watched exactly what he did, what decision he made, how he thought. He thought like a proper trader. He wasn't thinking, I've got this big ego, I've got to be right. So this is a lot of things. If people out there really want to learn how to trade, it isn't reading a book by itself is not going to help you. CD courses by themselves won't help you. You really probably should find somebody and sit next to him and find out how to trade. Like a mentor, we call them.
Okay.
Like that, yeah.
Have you had bad years, or have you ever thought about walking away, or had a big hit?
Absolutely. I've had bad months. You get that as in a trader. Yeah, absolutely. But as they say in trading, it's important to. You won't win every battle, but you'll win the war. Okay, just like a war, like the Civil War in America. Not every battle was won by each side, but eventually the war was won by one side. Okay, so it's the same thing with trading. You won't win every single month. Not every month will be a winner. Not every trade will be a winner. But
general trend is up,
will,
right?
yes, you'll win the war. So at the end of the, if you're consistent with your methods, at the end of the year you'll be up by at least between 60% or over 100%.
Wow.
Okay? I've averaged in between that. So
Did you get a bunch of job offers after your BBC interview?
yeah, there's a lot of people actually come up to me and asking, can you do this, can you do that? And I had to say, look, really honestly, I don't have time for that. So,
And working for a fund, is that something you ever considered?
Yeah, I've been approached to open a hedge fund and all that. We're certainly thinking about planning to do something like that, absolutely, with my friends and my trading partners, yeah. So.
And right now you trade kind of from your own offices with your computer screens and things like that?
Absolutely, I do that.
A real simple setup.
Yeah, absolutely, yeah.
Okay, wow. Thanks for the time.
I appreciate
Thanks so
it.
much. That was a stunning hour.
Yeah, it was
an hour and
intense.
change. So great. We're going to post your stuff, and thanks for coming on.
Thanks.
Thank you very much. I appreciate it. Thanks for having me on the show.
All right.
Welcome to London.